Hey, welcome back. It's Jason Walter here. In today's video, I have some breaking news to share with you, and that is that mortgage loan forbearances dropped yet again. So I'm going to share that with you today. I also have some information for those who have an FHA backed mortgage. If you're currently in forbearance, I have some options for you to share with you if you want to exit or end your mortgage loan forbearance. So I'm going to go over that with you today. In addition, I have a mortgage update to share with you towards the end of this video. And by the way, if you're new here, welcome. I post videos about how this pandemic is affecting our real estate market as well as personal finance topics. So if you haven't subscribed already, I invite you to join the family. Also, hit the like button if you appreciate real estate market updates just like this one. Also in this video, I'm going to discuss an extension for those who do want to enter into mortgage loan forbearance because that was set to expire on October 30th. So I'm going to go over that with you in just a little bit. But today I'm going to share my screen with you today. So let's go ahead and dive right into the video and give you a quick recap. This is from Black Knight. If you're not familiar with Black Knight is a analytics firm that provides data to the mortgage and real estate industries. And they have some great data on their website. So I'm going to just give you a brief synopsis of what happened the last couple of weeks. So if you recall from my video from about 2 weeks ago, it was announced on October 9th that mortgage loan forbearances dropped to their largest single week decline ever. The number of people who are in active loan forbearance actually dropped almost 650,000 from the previous week. And that was an 18% reduction in the number of people who are in active forbearance. That was a really good signal because of the CARES Act, people could enter into a mortgage loan forbearance for 180 days and then do another 180-day extension. So we're seeing a lot of people drop off before they do that extension. That's a good sign. So I also want to note here too that FHA and VA loans 2 weeks ago, they saw strong declines of people who are exiting mortgage loan forbearances of 213,000. So that was pretty significant 2 weeks ago. Then last week, they actually announced that they had a slight uptick of 19,000 loans who were in forbearance that week. In addition to that, they said that both FHA and VA loans had an increase of 8,000 over last week. So they're starting to see an uptick of FHA and VA loans, which I've been talking about on this channel last few weeks. And it was actually just announced today that the mortgage loan forbearances fell by 11,000 from the prior week. But they saw an increase of 5,000 for FHA and VA loans in forbearance. And if you're not familiar with FHA and VA loans, those are loans that have a minimum or low minimum down payment requirements. So FHA is a 3.5% down payment requirement, and a VA loan is 0%. And we're seeing, I talk about this in my channel, that we're seeing more people that have FHA and VA loans that are more adversely affected by this pandemic. And we can see that in the mortgage loan forbearances because we're starting to see a slight uptick over the past couple of weeks. So again, 8,000 increased last week, and then this week just announced today that we had an uptick of 5,000 in forbearance. So I'm going to go over that here in just a little bit. So it's really important to note here, I've been mentioning this in my videos as well, that Fannie Mae and Freddie Mac loans, the share of loans in forbearance is only 3.9%. However, when you look at FHA and VA loans, that's 9.5%. So more than double the rate that we're seeing for people who have a mortgage that's backed by Fannie Mae and Freddie Mac or Freddie Mac. There's now nearly 3 million borrowers who remain in forbearance, which represents about 5.6% of first lien mortgages right now. But this is a noticeable decline than what we saw in late May, because in late May, we had around 4.7 million people or homeowners who were in mortgage loan forbearance. And ever since then, we've seen this kind of slight decline or decrease ever since then. So now it's been more or less flat over the past month or so. But it's really important to note here too as well that more than 80% of the remaining forbearance plans have had their terms extended where they're servicer. Servicer mean that the company that the homeowner pays their mortgage to, so their loan servicer. So what this means that their terms extended means that because of the CARES Act, if you have a federally backed mortgage, meaning of FHA, VA, USDA, or Fannie Mae, Freddie Mac loan, you can enter into mortgage loan forbearance if you have a financial hardship due to COVID-19. We all know that. So you can enter into mortgage loan forbearance for 180 days. And then after that 180-day period is over, you have the option of doing another 180-day extension of your mortgage loan forbearance. So what we're seeing here is that 80% of the remaining forbearance plans opted to do that 180-day extension of their mortgage loan forbearance. And I don't see why you wouldn't do an extension, because you don't have to provide any documentation to support that you are having a financial hardship. So you might as well not pay your mortgage, unless, of course, you have the ability to pay your mortgage. Of course, you still should pay it. So overall volumes are down about 623,000 month over month, and that's driven by a large reduction in the loans in active forbearance plans at the beginning of the month from 2 weeks ago. So this marks a 17% decline from September, showing sustained downward movement in forbearance volumes. But however, we're still seeing a large amount of people who are in forbearance that have FHA or VA loan, 9.5% compared to 3.9%. So as of October 20th, which is 3 days ago at the time of this video, it was really great to see that the FHA announced that they were extending the date for single family homeowners with FHA insured mortgages to request an initial forbearance from their mortgage loan servicer to forbear or enter into a mortgage loan forbearance for their mortgage payments for up to 6 months. So that's really great to see, because that was set to expire on October 30th. Again, this is for an initial request to enter into mortgage loan forbearance if you're having a financial hardship due to COVID-19. So that was set to expire in a week from now, but they are extending that to the end of the year. So if you are experiencing a financial hardship and you have an FHA mortgage and you have a single family home, then you can enter into a mortgage loan forbearance up until December 31st of this year. So that's really great to see. And of course, you can request an extension beyond this 6-month period to do another 6 months beyond that. So the FHA requires mortgage loan servicers to offer homeowners who are experiencing a financial hardship to enter into a forbearance when the homeowner requests it. And again, just like I mentioned in my other videos, you do not have to provide any documentation that you are having a financial hardship. You basically have to attest that you have this financial hardship and can't pay your mortgage. So you can enter into this forbearance when you request it, and with the option of extending it for a year total. So FHA does not require a lump sum payment at the end of the forbearance period. This is a common myth. A lot of people are saying that, oh my gosh, these mortgage loan forbearances are going to end, and then they have to pay all their missed payments at the end of the forbearance. That is not the case. That is true for FHA loans as well as other federally backed mortgages, and I'll give you some details on that here in just a little bit as well. So in addition, the FHA requires mortgage loan servicers to assess homeowners who receive COVID-19 forbearance for its special COVID-19 National Emergency Standalone Partial Claim. So that's a mouthful. Before the end of the forbearance period. So you can request this partial claim prior to the end of the mortgage loan forbearance, which your loan servicer is required to reach out to you within 30 days before your mortgage loan forbearance is supposed to end. So it says the COVID-19 National Emergency Standalone Partial Claim puts all suspended mortgage payment amounts owed, which means all your missed payments during your forbearance period, into a junior lien, which is only repaid when the homeowner sells the house, refinances the mortgage, or the mortgage is otherwise extinguished when you pay off your mortgage more or less. So you can enter into this, which is great because you basically can stack all your missed payments on the back end of the loan, and you do not have to pay those until you sell your house or refinance. So it's really great to see that. However, if you do not qualify for that, then there are other options available for you. And I'm going to go over here just a little bit here. This is on HUD.gov. As of July 8th, 2020, they announced effective immediately that mortgage servicers will be able to use an expanded menu of loss mitigation tools known as a waterfall, meaning that they first go with option number 1 and then option number 2 if they don't qualify for option 1, and there's a trickling effect. So if you don't qualify for the initial ones, you may qualify for the last one. They have these options for people to bring their mortgages current if they do not qualify for FHA's COVID-19 National Emergency Standalone Partial Claim. So these options are available for homeowners whose mortgages were current or less than 30 days past due as of March 20th, 2020. Really important to note here, you must have been current on your mortgage as of March 1st, 2020, or less than 30 days past due. So this is only for homeowners who occupy their FHA insured residences It also requires that loan servicers assess homeowners for the following. So number one, this is a trickling effect. So of course, number one, COVID-19 National Emergency Standalone Partial Claim takes all past due payments and puts them into a junior lien, just as I said, but it's only up to 30% of the mortgagee's unpaid principal balance. And of course, that's due when the borrower sells their house or refinances. However, if you're not eligible for that, then you can do a owner-occupant loan modification. And that is for homeowners who do not qualify for that. It modifies the rate and term of the existing mortgage. So more or less, it's a loan modification. So therefore, your payment is going to be less. So that's a great option if you do qualify for that. There also is the combination partial claim and loan modification, and that's for homeowners who do not qualify for these first two options. And that allows for the partial claim of up to 30% of the unpaid principal balance, and any amount owed are handled through a mortgage modification. So it's basically a mix of these first two options for you. In addition, if you do not qualify for any of these options, then you can do an FHA HAMP combination loan modification and partial claim, and that reduces the amount of the documentation needed in order to obtain this combination partial claim and loan modification. On top of this, if you do not live in your house and you're non-owner occupied, then you do have options as well. They have a COVID-19 non-occupant loan modification, which allows the non-occupant borrowers, such as an investor, who have received a COVID-19 forbearance, to obtain a modification to their mortgage term and rate. So that's for non-occupant. So keep in mind, you do have options if you are in forbearance, whether you are live in the house or you don't. Keep in mind here too, this is a nice note that none of the FHA home retention measures, including those announced today, this is July 8th, require a borrower to make a lump sum payment at the end of the mortgage loan forbearance period. So no lump sum payments, that is not required as a common myth. So servicers are not permitted to charge fees or penalties as well, so keep that in mind. This goes in line too with my previous video from a couple weeks ago on Fannie Mae's website, which is knowyouroptions.com. You do have options available if you want to, when you're exiting their mortgage loan forbearance, one of those being a reinstatement, which means you pay all your missed payments all at once, but you're not required to do so. Other three options would be a repayment plan, which basically you go on a payment plan over the next 12 months in order to pay your missed payments. In addition, you have a payment deferral option and a loan modification. And keep in mind too, for federally backed mortgages, which they call GSE, government-sponsored enterprises, GSEs, which are FHA, VA, USDA, Fannie Mae, and Freddie Mac. They do have a foreclosure moratorium that's until at least December 31st, 2020. That protection began in March 18th, 2020, and extends it through the end of the year. That was extended several times this year, so it'll be really interesting to see once we get closer to this date whether we're going to extend it into 2021. I'll definitely keep you posted on that. So in mortgage news, I want to go over this real quick with you, and then we'll wrap this video up. So mortgage applications actually decreased last week by 0.6%. So some people might say, oh my gosh, the market's going to be crashing because people aren't applying for mortgages anymore. It's really common during this time period, which is end of October at the time of this video, for the real estate industry to cool off as we approach the holidays. However, I want to point out when you compare this to 1 year ago, we're still up way above last year's levels. So the refinance index, again, this is a compliments of the MBA or Mortgage Bankers Association. The refinance index actually was 74% higher the same time 1 year ago. So the refinance index is way higher when you compare it to 1 year ago. And the unadjusted purchase index, which actually decreased by 2% this from the previous week, we're still 26% higher than the same week 1 year ago. So even though we're seeing a little bit of a slowing right now in our industry, it's still well above what we saw last year. And I think that's because we had this pent-up demand from the springtime when people weren't even allowed to look at houses. And of course, record low interest rates, which Freddie Mac just announced a couple days ago that they reached a new record low for a 30-year fixed rate mortgage, which is a 2.8%, which is absolutely crazy. Slightly different from what the MBA says, but still absolutely very, very low, record low interest rates. So the FHA refinance applications posting a 17.6% increase. So obviously people are doing a lot of refinances right now, and purchase applications actually decreased 2%. So more people are doing refis right now, which is no big surprise because we're having very, very low interest rates. So the refinance share of mortgage activity increased 66%. So out of all the applications for mortgage loans, 66% are for refis. The remainder are for purchases. Another great thing to see is that adjustable rate mortgages, or ARMs, decreased to only 1.9% of total applications. That's really great to see that number low, like I mentioned in a lot of my other videos, because this tends to be a mortgage product that's a little bit more risky, of course, than a 30-year fixed rate mortgage. So according to the MBA, for a 30-year fixed rate mortgage with conforming loan balances, that's with balances of $510,400 or less, that the rate is 3.02%, and that is a contract interest rates people are actually in contract for. In addition, for a 15-year fixed rate mortgage, the rate increased to 2.61%. So very, very low numbers here. And that's today's housing market update. So I appreciate you watching this video. If you like this video, please hit the like button. I greatly appreciate that. That helps support this channel. And also subscribe if you haven't done so already. I post videos, of course, about how this pandemic is affecting our real estate market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. Look forward to seeing you on the next video.